Good morning, everyone. Microphone check, screen check, webcam check. Finally got the thing to, I think we finally got the thing to work, huh? Or at least on the YouTube side. I don't know if I can do both on Zoom and on YouTube, but yeah, looks like it's working well. Awesome. Welcome, welcome, welcome. Hopefully everyone has been able to rest up, get ready for the day ahead and all that fun stuff. As always, before we jump in on the left side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. Just a quick note for you all. I feel special today, just you and me, yeah, I know, right? Just a quick note for you all before we jump on in. Please keep in mind that the YouTube broadcast does have between like a 5 and 30 second delay, depending on where you're logging in from. So, that will definitely impact the timeliness of what we may be talking about at the time. So just kind of keep that in mind as we go through the day. Just as a side note as well, I did hear yesterday there were a bunch of CQG issues where people, like, you'd be able to put on an order and you couldn't take it off for like an hour. There was even an email from one of my brokers. It was like, what was the sentence? The P&L is solely up to you or something like that. Like, it was basically just, we're sidestepping, you trade, it's your problem. It was pretty crazy, but I think everything is back to normal now, so we should be okay from that perspective. So hopefully the markets will be relatively solid without any weird naked orders floating around there that we can't close. Anyway, just want to take a second to give a shout out to the latest members that joined in the overnight session yesterday, over the weekend, etc. I know I wasn't in the room yesterday. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education, your trading career, or if you're just looking for a cool chat room to hang out with a few other traders. Here on YouTube, you can check the join button below the stream. The YouTube family gains access to the extended hours trading room, which continues the morning session from 10 until whenever we end up closing, 10:30, 11 o'clock, somewhere around there. Every member gains access, permanent access, to the Discord chat server, and of course, you get the awesome badge next to your name here on YouTube to show your support. To understand what it is that we are doing here every room, this is something that is easily figured out. All you got to do is swing on over to the Day Trading Academy. The Day Trading Academy, listen, this isn't like a small PDF guide you're going to finish in an afternoon, okay? You're talking 19 plus hours of course and video study material, including homework, review. There's a lot of stuff involved in this, and it's by no means a small little adventure that you can partake over the weekend. So you best tuck in. And then finally, the big one, the big kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to our non-delayed stream that covers the entire morning session from 9 a.m. until whenever we end up closing the room, to ensure that you're on the fastest connection possible and so that you don't miss any beats along the way. Alongside that, VIPs also have access to our monthly webinars, which there's one coming up this weekend, different private events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you are a veteran, a seasoned VIP over on the Zoom stream, welcome. I'm glad to have you trading alongside me today along these crazy markets. We'll see what all wants to go on. Let's take a look at some news, take a look at some charts, see what's going on for today. Don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7 markets that we take a look at. So you've got all of those big zones of interest to keep our eyes on. Looking at the news calendar for today, I mean, the news calendar is pretty light. There's not really a whole lot going on, to be fair. We've got the existing home sales at 10 o'clock. That is a relatively big number at 5.72 million. Now, let me clarify. I know I said we don't have a whole lot of news or anything going on. We do have a good chunk of news going on, but there are other market things that are happening right now that kind of, I don't want to say invalidate the news, but they make it less important, you know. We do have some news at 10 o'clock, though. The existing home sales, 5.72 million is the forecast. Along with that, at 10 o'clock, existing home sales for May. At 11 o'clock, we've got FOMC member Daly speaking. At 1400, Fed Chair Powell testifying. And at 1630, it is Tuesday, we have get the API weekly crude oil stocks. So to give us an idea as to what to expect for the inventories as we go into tomorrow. And then just a general overview as the market was at that point in time. But let's take a look at what's going on here and start off on the NASDAQ and kind of work our way across. So from the NASDAQ's perspective, I mean, I think it's fairly safe to say right now that this is, although it is still a bull trend, right? I mean, the market is still going up, higher highs, higher lows. I I mean, it is, right? It feels like it's kind of fallen on its face. We hit a huge roadblock up here at 14,200. And the way that it formed up there, just like that was a brick wall. It just did not let anything through there. So the fact that that 14,200 area was such a stiff zone of resistance, I mean, now we're coming back and it whiffed the air. It didn't even test it. It just got close and it started backing off again. That level's nasty. So 14,200 might be the little bit of a break zone that we're going to have to deal with. Settlement is right on top of the previous major swing. That will be a zone of interest, but I mean, we're right on top of settlement. We're basically in a range. There is a slight bullish conviction. I think that's fair to say, but realistically, I think we're going to have to approach today more like a range, unless proven otherwise. There was a very strong rally up this morning, which we'll get into in a second here. But from from a probability standpoint, the only zone of interest that really stands out would be either the -1 or the 1.5. Or the -2. Basically, everything on the way down except the -0.5 are all zones of interest. The -1 is okay, but you start getting down the 1.5 and 2s, those are big. So definitely want to keep my eyes open on those. We've got, I mean, it's, man, I hope we get out of this range soon. Now, it's interesting because the S&P looks very different from the NASDAQ. The S&P has a structural V-bottom, like perfect V-bottom. And the way that V-bottom kind of stuck in is what we were talking about last week. If you remember, the important part about a V-bottom, they've got to break that high. Bing. They did it this morning. Is that enough? I mean, it was all a wick, so realistically, is that going to be enough? They've got resistance coming off the highs there. Maybe, but is that the only one that I really want to stick with? A lot of times when the V-bottom sets up like this and they do break above the highs, but that high is weak, they get a halfway decent pullback. It's usually like an L2, L3 pullback. And then they get the continuation to the upside. So I've got to be very cautious up here. We are very likely setting up a top-weighted POC, more likely because the market's just spent so much time up there. It's had a lot more time to create the POC. Yeah, there it is. So 42.13 is the POC up at the top. But realistically, you can see what's happening. Right? Look at the rejection that's happening right now. Right? It just broke above it, bounced off of it, and now, I mean, you tell me, that looks like a break-even test. It looks like a lot of sellers just jump ship. They don't want it no more. Maybe. We'll see. Do you use the 500 tick chart for the S&P and the Dow? I adjust the tick sizing based on the volume of the market and how liquid or illiquid it is. The Dow is incredibly illiquid. So using a 500 tick, you're probably going to get like 20 candles. You might be better off in the Dow with like a 250 or even a 125, just kind of having it a little bit until you get a few more candles. Usually with a tick chart, my go-to rule that I look for is that on a tick chart, a full day should be able to fill about a page or a page and a half of my screen, right? So, as far as a tick perspective goes, with the S&P I typically look more at like a 2,000 tick because it trades a lot more volume. Obviously, right? So putting a 500 tick on the S&P, there's nothing wrong with that. You're just going to have a billion candles all over the place. And that can create a lot of noise. And, well, my viewpoint on noise. It's not really noise, but it can create a lot of false moves that can really, really trick you if you do too fast of a time frame. So just be careful. But typically I want to see about a full page and a half of candles if I'm using a tick chart. S&P, man, the S&P really looks like that 42.13 point is a rocket ship zone. Over on gold, big cycle to the downside. Obviously, it has separated away from what it was doing. We had this giant dive down, giant dive down, giant dive down. We've got the 3 pulses, and now from here, we're just kind of going sideways. Doesn't mean that it can't get another giant pulse to the downside, but as it stands, we're trying to find at least a little bit of a base. If we go from the top to the bottom, very likely there's a POC down here. And actually, that high is a little further back. That's way up here. So that might mess with the POC because it did spend a lot more time up in the highs. Come on, indicator. I know you can do it. There we go. Okay, so the top-weighted POC on the highs, if we go all the way back to June 1, then the POC is up at the top at 1895. Obviously, the market spent a huge amount of time up there. If we're looking at the more near-term, the more, in my opinion, logical perspective as far as what the market is doing, we have a massive POC that is attempting to shift on the bottom. We do not have the supported bouncing like we saw in the S&P. It's nowhere near the same scenario here. Buyers are trying to get it to go back up. 78.50 is the spot. They're going to have to break that. They're going to have to do something because this right now is not good enough. We just came off of a lower high. Now we're under the POC. That's a lot of problems. I don't know that I would want to deal with it on the long side. If buyers were going to be coming in on gold right now, I think at the very least you'd want a halfway decent bull bar closing above the POC. Man, I would have to approach gold with low probability only. I can't imagine it being higher than 35%. So as far as longs go, I think it's okay, but you've got to go for like 3-to-1s. I just don't see a reason otherwise. 2-to-1 puts it all the way back up at 1820, but again, I'm not sure that's really the case. I think it makes more sense to go for the 3-to-1, which is at 1840. It's still inside the high, so that's fine. But probability, I just don't think is in the bulls' favor yet. They're trying, but if they lose that, that's a big problem. Looking at crude oil just continues to go higher. We broke above the $70 mark, and the $70 mark, although it did kind of create a bit of magnetism, if we look back, they kind of poked their head above, sunk below, popped up, sunk below. This is what I call level gravity, right? Just like an orbit of a planet. Gravity kind of sucks it back, but when it gets there, it overshoots it, and then it's got to come back, and then it overshoots, and it comes back, right? And you get this orbit around this area. It's the same thing that's going on here. You've got this $70 mark, and price is orbiting it, right? They're just kind of whoop, whoop, whoop. Oh, big shot. Oh, now that was kind of like the slingshot, right? It pulled down, it pulled the thing back, and then shot it back up into the sky. They roll all the way back up into the sky, but where do they pull back to? Back to 70. Acting as support once again. So as long as the $70 mark is acting as support, realistically, we've still got to assume that the bulls are in charge. This is a wild-looking chart. I mean, this is very reminiscent of the NASDAQ back when it was ripping higher. We're going to have to go back to a 60-minute chart just to find any structure whatsoever. Man, what a nasty-looking channel that is. It's these first two lows, and that's what gave the bounce right there. That's insane. If we go across the highs, oh man, that's nasty across the highs. The top is definitely a lot more gross. The bottom, significantly stronger. So support down here in the 71s. Pullback area would be a lot nicer. Jump back into the 15. Swapping over to the euro, it's a similar situation to gold, obviously, but if we look at the POC, drive across the bottom, let's see what we're working with here. That's even worse. That's even worse. 1.19350. Now we're under the POC, not even close to it. They're under settlement, haven't even made a lower high, really. It's just a bunch of really bad movement up here. The euro is not looking good at all. If the bulls are going to take it back, they're going to have to crack above that 19,350, and we will likely see something similar to what we saw in the S&P, where we get that nice little snapback supported bounce. As of right now, we don't necessarily have that. And then over on the tank fest that is Bitcoin, we were talking about this. I made a post over the weekend on Twitter talking about how if Bitcoin loses this area, and I think I talked about it in the chat room too, where if Bitcoin loses this giant cluster zone from 35,000 to 40,000, there's not much left until down at 20. And we've been talking about that for a while, but now we're starting to actually see it come to fruition. Like, we're breaking down further. It's really fallen apart. We've got a big negative 1.5. A lot of support off that negative 1.5. Is this the bottom? I mean, maybe, but realistically, this just seems like this might, if it is going to be the bottom, we'll probably see a rejection off of that major spike low, right? That's hovering around the 30,000. Actually, I think it was exactly 30,000. We have broken underneath it, but if that's going to be the zone that they're playing off of, we'll probably see something more along the lines of this, where you've got that giant candle, got the wick at the base, and then as the market's coming down, it bounces off of it, chops through it, and this is the important part, what we need to see if the bulls are going to take it. We break through, They try again, and those end up being higher lows, and then they fail back up. That's what we want to see for a rotation back higher. We're a long ways away from that, but we'll see. Over on Ethereum, big sink to the downside, 17,075 now. Big zone of interest going to be down in the 1500s, but or 1700 rather, sorry. Not 17,000, jeez. Everybody just ripped their Ethereum charts open like, wait, what? All right, let's switch over to the internal and see what's going on here. Zooming in a bit closer and looking at the, well, I guess not a bit closer. First off, we're looking at the daily chart. This is the area that we've been talking about for a while. We still haven't reached up and grabbed that objective at 14,400, but we are getting stuck here for the better part of like 2 weeks so far. I mean, we still have a little time to go. You know, the last time we had that kind of movement, we were talking about how it gets stuck here, usually for a couple weeks, or it's going to rifle lower. Well, it obviously didn't rifle lower, so we're probably just going to get stuck here for a few weeks. It's a bit of a bummer. As far as the overall movement is concerned, obviously we're still way above the POC. The sellers tried. They totally failed. If the sellers were given a secondary attempt, yes, the sellers may have taken this one, but also notice where this went back to. This may very well have also been a break-even exit for the earlier sellers who tried taking that first shot down. Very nice bounce off of that low for a continuation back to the upside. Bulls are still very strong. Over on the 60-minute chart, mostly sideways. We did get a POC test up the top. That was at 14,170, and the rejection off of that is a major concern. Now, with that POC being top-weighted, this obviously went down. If you're looking at the risk factor, assuming that their POC is their average and their actual risk would have been above the top, this went like 7-1. Like, it was a huge move down. So the fact that it went all the way down and now it's trying to rotate back up again, I mean, realistically, if buyers are going to try to get this to rotate back up, they shouldn't have stalled right at 170. If they are going to still break this higher, this bear bar shouldn't trigger, or if it does trigger, it's not going to trigger by much before reversing back up. One of those kind of false head fakes, right? So we'll see if they can pop their way back up there. But that bear bar off that POC retest is a bit challenging. On the 15-minute perspective, we've got 14,060 was that major pullback leg. If we look from the top to the bottom, that POC ended up being 14,060. And although they did kind of chop through that a little bit, in the end, so far, it has held up pretty nicely, especially with that to the tick retest. The only thing that we're missing is a new high, which we already kind of talked about. There's a lot of weakness up there at the 200s, and that extra POC test makes it a bit harder. Fingers crossed, though, huh? From the Asian to Euro session, we have a big shift to the downside and then a V bottom all the way up, reversed all the way up into the clouds, and now we're pulling back a little bit. This kind of movement, right, when you have this giant blow-off move where it's very obviously a V bottom. One of the things that we talk about with V bottoms, how they have to break that high. This one was a bit more obvious than the other one we were looking at. Very nice break above the highs and a nice sharp little pullback here. So as far as a zone of interest, if we're going from the top or the bottom to the top, the market really didn't spend a whole lot of time in any one place here. But if there is a zone of interest that it's going to want to pull back to, 86.50 is that spot. Maybe a little bit above it. There is a VVP just above it at 90, 91, 92. But this area is going to be the hot spot. So we'll see if they can work their way down into that area. Got the open right around the corner here in about 10-ish minutes, 11 minutes or so. S&P open, technically it's inside yesterday. Jeez. That move up, wow. Now, another perspective that you could look at, more from a perspective of a range, and with ranges, a really good way to check ranges would be like the daily median, if you measure from top to bottom, where's the halfway point, or VWAPs, and the standard deviations of those VWAPs. Because remember, when you're in a range, you're looking to buy low, sell high, stay out of the middle. Let me pull up a chart real quick here. Oop, 10 minutes. There we go. All right, let's get the VWAP on here. So zooming way, way out and looking at the overall volume weighted average and the deviations of that VWAP. This is a very slow tick chart. This is a 2,000 tick chart. You could use a 15-minute chart. Honestly, the only reason I have 2,000 tick up here is because I converted my S&P chart over to this. So that's the only reason it is that. But, you know, 5-minute, 15, whatever. All of them show or will show roughly the same thing. The median price is this green dash line, which we just bounced off of. And that makes a lot of sense. Not from the fact of support. Remember, we're in a range. Sellers are looking to sell high. Where are they going to look to take profit? Right where the POC always shows up in the middle of a range, right? In the middle. Stay out of the middle. That's because everybody's taking profit there. It's really herky-jerky. Now, if we do deviate a little bit lower, then, you know, realistically, you're looking for the same thing. Get a standard deviation pull down to like the 74s, 70s, 60s, somewhere a little further down. Buyers will try to pick it up to push it back up to the median. Until that context is changed, of course. But something to keep in mind, right now, we are smack in the middle. This is a terrible spot to try to be looking for anything. My POC from the bottom is 14,168. Is it? Let me try to refine my measurement. I only have the bottom candle, and I only have the top candle. Yeah. So my measurement is only including this bull bar, not anything before it, and this bull bar, and nothing after it. If your POC is drawn maybe a little bit more inclusive of some previous prices, or maybe drawn a little bit further forward, like up to this lower high, that might have been enough to shift it, yeah. So with that lower high, if you draw it all the way up to here, then yes, that POC does shift to the upside. That would be a modified POC. That is not the impulse POC. The impulse POC is the market's effectively what the impulse POC is, and why I like it so much and why I pay more attention to that one than the developing one, is the impulse POC is the market's literal response to what happened. Right? You're looking like an X-ray straight into it. How did they respond while the market went from bottom to top? What happened? Huge amount of orders took place here. You can see that congestion, and it failed. Well, my assumption then would be that with this giant drive to the downside, I would assume, and I would almost wager, that if we put this, that's going to be an L1, right? Yeah. So sellers, realistically, they're trying to sell an L1. Why wouldn't they? Right? I mean, with this humongous drive to the downside, although it did detach very aggressively, parabolic, overextensive, exhaustive. I mean, there's a few reasons why you wouldn't. But the L1 sellers very obviously tried, and they very obviously failed. When they very obviously fail like that, were they given a chance to get out of break even? I don't see one. Now, if we modify this and go a little bit further forward, we can see that they have likely added more to their position, and now their average is more so up here. Looks like it was about a doubling, right? So it was a 1-to-1 add, meaning that their break-even point would be roughly in the middle. Guess where we bounced? Whoa! I would have never guessed. So just keep that in mind, right? We've got the impulse POC and then we've got the developing POC. The impulse POC and the developing, they can both give you incredible amounts of information. An example, since we've got about 6 minutes left, we've got some time. One of the big things that I love looking for is if we have like this giant leg down, and the impulse POC is down here, and I'm going to do that in yellow actually. The impulse POC is here, right? So the imp POC would be right there. The developing POC, after the market has maybe gotten a higher low or something like that. Right, the developing POC maybe, actually, I should have done it. There would have been like one up here. Whatever. Let me restart that because that is very important to get that part right. So one thing that I like looking for, let me try this again, is if the market is diving down and we create this small little congestion zone and then they break lower. We've talked about this tons of times before. It usually creates a short-term POC in the middle that we can then measure top to bottom and get a deviation target to the downside. I'm not going to go into that. We've covered that a million times over. But what I like seeing then with that impulse POC, which is what this would be, eventually, you will have the market that spends enough time to create a secondary POC down here. And this is the developing POC. Now, the developing POC, if the developing POC shifts down here, that means, to me, that if these were buyers, and again, context is everything, but if these were buyers, they have now averaged themselves down. I can use this information to my advantage to see what it is that they might try to do. Are they going to try to get out at break even? Are they going to try to get out at the top part? One thing that I love seeing, though, let's say as an example, we don't get a POC shift down here. Then this becomes a brick wall, okay? That's everybody who got stuck. They did not have enough time to average down. So when it comes back, what do you think they're going to do? They're going to jump ship on everything. So those POCs can give you a lot of information, context, of course, but yeah, no problem. So if you look at it from here, as an example, if we measure from the top down to the lowest point, the impulse POC is actually up here. So, I mean, right now it doesn't look like if those were bulls, they didn't do a thing down here. Like, there's no interest. There's no POC shifts. There's no changes. There's nothing on the impulse. If we drag it forward, there still isn't. They haven't averaged down yet. Or they are still waiting for, like, 86.50. $9.30 right around the corner here. Nice continuation breakdown. Now, technically, this means that this is part of the impulse leg once again, because it is a new low. Not by much. Downside objective is still open. Starting to see the moving averages pulling back a little bit. I mean, we're coming out of the middle. It's not much of a surprise. It's the median price. 928 is the next big time slot that is around the corner. Be careful. Quick little tap on the low, immediately rejected back up. This isn't really proving a whole lot on this downswing, but we do have, we still have room to the downside. I'm not necessarily opposed to a short. Breaking away from the middle, trying to get down to the lower end. One minute until the open. Yeah, I finally got the webcam going, yep. Ziggy ate through my the cable on the other one. But we got it going again. Open right around the corner. All right, inside gap down on the S&P, basically inside of all of that volume from yesterday's bar 53 all the way until 78. Got stuck there big time. If the sellers are really interested in this, I mean, realistically, we should see them drive down to another low, but there's an obvious problem with that. That would be a 3-press base. That's a toughie. Retest a settlement. Actually, technically, that would be the first test of settlement after the open. Very big breakdown. Looking for sellers to want to reshort this area. Downside objective initially is going to be down to the 1150s, although realistically we should be able to see price press back down to the 115s. It is a 3-press low, so understand the risks involved with that, but we're in a range. Selling for the downside objective makes a lot of sense to see if they can creep down to the 89s, 90s at least. And look at the resistance every time bulls show up. Let's modify the POC a little further forward. We're back under it again. Even more emphasis for the sellers. Beautiful drive down for the first target. And, oh man, I got a crap fill on the second one. What? I dragged the order when it was down in the 13s. I got a fill at 15? Garbage, okay. Well, this big rip to the upside. I mean, it's pretty obvious sellers were quick to jump ship on that one once it slid back down, but that was disgusting. Sorry, let me get my orders on there. There we go. All right, well, see if they want to show up with something a little bit nicer here. We're back in the middle again. So this is an incredibly difficult spot to want to do much. But we are back above the 25-quarter POC. That was after that giant rally to the upside with a proven V-top. I wish we would have hit an objective down here, at least in the 90s, but... $9.33. We're not past the first 5 minutes yet, but sellers so far giving it a shot and failing miserably on that first move down. Let's see if we can get a pullback down to that 25 quarter. Now that we're breaking above, though, look at what's happening at these highs. There's a ton of resistance going on. If we go from the bottom up to the new high, we have a POC at 1375. Yikes. Sellers still trying to pressure back down. Got about a minute until the first 5. Fantastic bull bar. Buyers coming back in again above those 35.75s on the shorter term. We've broken above it. Those sellers have failed. And now look what's happened on the developing side of things, or the impulse side of things. If we go from the top all the way down to the lowest point, the impulse POC is still up at the top. This is exactly what we were just talking about, right? So the impulse POC is up at 168. The modified or developing POC is down here. So what does that tell us? Look at the volume sizing. This is about twice as thick. Right? I would say they doubled down. If they had 10, they've got 30 now, right? They added 20, doubled down. So realistically, their average isn't halfway back. Their average is 2/3 down. We're already above their break-even point. They're in the positive right now. Very important information. And that also means that if the market gets back up to the 168s, it doesn't have to stop there anymore because they've averaged down. The sellers just missed a huge objective getting down to those 90s, and the buyers gobbled it up like it was going out of style. Big old ripper to the upside. We've got the first 5-minute candle out of the way now. Ooh, man, what a 5-minute bar, too. Lordy, lordy. All right, first 5-minute bar, POC 146. That's the first 5 POC. Top to bottom. Bottom to where we are now. So 168 will likely be a zone of resistance, but it doesn't necessarily have to stop the market. And there's the resistance. Starting to drive above. Which way do we go? Starting to get a little bit of a pullback now. Not much, but 16161.50 POC on the top, although yeah, the impulse POC is back at 146, which was the 5-minute top. Bull engulfing bar popping back above that previous 500 tick. Bulls might be trying to get it to go, but remember, we've got more of a range sentiment. I have a hard time buying way up here, especially since we're not above that 68. Now we're just going to have to work through that too. Looks like I'm not the only one that shared that sentiment. All right, bulls pop it right back up again. We are breaking through that 168 volume node. I mean, again, this isn't a surprise. We kind of expected that already. Was a decent amount of resistance off that 168, so some fairly obvious profit taking going on, but whoa, what a bear bar off the top. See if we can get a little bit of a reset or a pullback or something a little less intense. Give the market a little breather. Don't have news until 10 o'clock, so nothing to worry about on that front, or at least any big news. Pulling back off the highs just a bit. Really strong bear bar off the high. That thing's a monster. We're coming back to the POC retest, and they're back underneath it. This is the seller's chance. This is their shot to take it. We'll see if they actually do. Nice slide down. 146s will be a zone of interest for the buyers to try to pick it up again. We're underneath that POC, although it's not the developing. On the 15-minute MES, there's 2 POCs at the top. Let me take a look at the screenshot here. Thank you for the screenshot. You'll have to give me a minute, though. Print screen has been taking a century and a half to load screenshots. We've broken back above that POC, and notice where this is kind of wick pulling back to? We're kind of getting a little bit of a snap back down to this area for the bulls to try to pierce it back up. Sellers are trying. It took me a century to copy. Yeah, I bet. Bull's trying to climb back up again. That's a really nice bull bar. I'm going to look to pick up just a short-term long for a pop back to the upside. Beautiful stop run dip underneath the lows. I only got one fill on that. Fantastic. Thank you. Jeez. Take the second one. That one, that was barely even a scalp. That was mostly above break even. It slid down further than I really wanted it to. I wanted that bull bar to get a quick little pullback and then pop because we were above that POC, but it didn't happen. I'm not going to hang out if we're breaking back underneath. Let me take a look at that screenshot. Finally loaded up here. Ooh, geez, yeah, that's nasty, huh? I mean, the big thing that's stepping up right now, fairly obviously, is there's a big cluster back here. I'm sure if you were to draw the POC, like, up to here or here or here, there would have been a POC back here. But now that we've gotten a bit more information, it seems like they tried shorting here, or maybe it was buyers taking profit. I don't care. One or the other. But there were a lot of orders hitting there, and from my assumption, given that this move up was so aggressive, it were sellers that failed, and that was the stop run, or the squeeze. The majority of the stops probably got hit right about there, actually. With that continuation to the upside, shorts with the infinite money hacks, those good old Goldman traders and all them, they have the ability to kind of average in. And if we're looking at it from that perspective, we've got this one, and we've got here, and we've got here. And there is a definitive space between the two. But realistically, if you stack these together, they're about the same size. To me, I would look then at the next thing. How much volume are they actually placing? We've got about twice as much. Looks to me like they're averaging up. 2-to-1 style. Right? Their objective is to get out around the POC, around the break-even point, or better. Right? Because this rounds their average up, not half. This doesn't put their average here. It puts their average here. Or maybe a little bit underneath. You get the idea. It goes 2/3 up instead of half. So to me, that would seem more like sellers got stuck and they start adding in. And they're looking to exit on the next pullback. And that would also potentially explain why there was such a strong response on the retest of 675. Considering that it got hung up there for the better part of 2 hours. You know. See, and this is why I didn't want to hold on. You'll notice what everybody did on that next pop-up, including me. I wanted this to go screaming above the POC and shake everybody out. What didn't it do? That. So, buy where everybody's getting stopped out, average out at the middle. That's what look at the wick. There's a reason why that wick rejection happened there and not somewhere else. Starting to get that slide down. Big pulse to the lows. Or not the lows, the new short-term lows at least. On the way down, they still haven't even had so much as, well, like an L1. I mean, I guess this little one right here was, what, an L3. Barely an L1, L1. So we got some L1s on the way down. Maybe they find an L2. Looking at the POC from the top to the bottom and working its way forward. Oh, man, it's right up at the top. So context-wise, look at what this would look like, right? I mean, realistically, buyers, I would assume that these were potential buyers. They were trying to buy in. We've got a bottom-weighted POC right here around the previous POC. Breakout to a new high. It makes a lot of sense. I was one of them. Right? So, I mean, it makes a lot of sense that buyers would be coming in here. I mean, quick to exit, but a lot of buyers may still be stuck. That 159 becomes a bit more interesting. $9.45 around the corner. Sellers still pushing to the downside. I mean, what kind of risk are we looking at on... Now that we failed off of the highs with a lower high, a very distinctive lower high, they missed that top. Man, that's nasty. We still have a higher low. The sellers need to prove it by breaking down a little bit lower. But they're going to have some work to do. That was a big chunk of volume that came in down there in the 26s. This might be buyers kind of nervous, adding a little bit more to try to bring their average down. Could also be a lot of sellers taking profit at Euro session highs. Either way, selling interest stopped. Bar 1 on the S&P, nice strong bull bar back to the upside. But, again, smack in the middle of that range from yesterday. Big bear bar to the downside to the lows of the range, which seems like that was fairly obviously defended. And now we're catching another bounce back to the upside. Weakness, though. They got to show up. That's a good start. Looking for that 14,159 area to act as a brick wall of resistance, assuming that they don't shift the POC to the downside. Which they may still be able to do. There's still some time. Okay, they shifted the POC. The market immediately pulses to the downside. Now they shift the POC again. Now they shift it again. There's a lot of orders sitting inside here. No longer necessary to treat the 159s, 160s as resistance, though, unfortunately. To see if we can get a little bit of a pullback into the 41s, 42s for buyers to try to pick up a swing back to the upside. Nice pulse back up to 146 is the first target, but I would like to see a move back up to like the 50s at least. All right, I'm going to jump ship. That slid back further than I wanted it to, and now we're back below the POC again. Man, vindictive market this thing is. Looks like everybody did the same thing again, though. I mean, we're definitely not alone in these decisions to jump ship every time, but man, it's frustrating not getting it to go. Oh well. I mean, obviously, each time we've jumped ship, it's been a good decision. So, I mean, I have to give myself at least a little bit of credit. Like, hey, okay, good job. Didn't get messed up on all of this back and forth. But at the same time, it is very frustrating. But welcome to trading, right? You know, it's just kind of part of the territory, I guess. Doesn't matter what I want. I have to listen to the trade plan. Trade plan said get out. I got out. And I'm glad I did. The importance of following the plan. Big bear breakdown. Although realistically, after the bulls try once like that and fail, the next move down is either going to be a catastrophic failure for the sellers, or it's going to be an incredibly strong move that will likely drive down and finish the move off to 90s. It's a really, really polarized situation that's happening there. But sellers will be selling into this pop back up to settlement. given that. But keep in mind, low probability, go for big targets versus your stops if you're going to be swinging it short like that, because you're right in the middle again. Right. And if you're looking at the median, I still have that chart open. If you're looking at the median, we're there. The median price is 122.75. The VWAP's 135. We're literally in the middle. The one thing that does kind of stand out, on at least on the 2000 tick again, the only reason it's a 2000 tick is because I swapped my S&P chart. But we've got two lower highs. Maybe that's the third. Usually they line up a little bit nicer, but that's a potential problem. POC is, I mean, the developing POC at least, we're kind of hovering underneath it. If we're looking at the POC on the impulse side of things, they didn't even make it up to 159. And even with the higher low, it's still up at 144. All right, got about 9 minutes or so until we head into the 10 o'clock time frame where we have training and all that. Give me a second. I've got to... I'm going to sound like a 90-year-old here, but I got to get up and stretch my hip a little bit. I pulled my hip flexor over the time off, and man alive, that is some pain. That's brutal. So just give me a second. I'll be right back. All right, we're back. Sorry about that. There we go. All right, market. What you trying to do? We're back in the middle again. Bulls might be trying to buy this pullback for a quick pop back up to settlement. What does the context tell you when a POC is thick compared to a thin POC? Thick. Like a thick POC? What do you mean? It's like the reason why I'm confused, just so you can understand where I'm coming from. A thick POC, like a POC only plots on one price. So I'm confused what you mean by thick.
It's done.
Okay. Give me 1 second. I gotta get my son's ravioli. All right, sorry about that. All right, the bulls did get their continuation pulse up to that 14,146. If we go a little bit further now, we do have the impulse leg down to the lows. All right, hey. Starting to churn back up again. Sellers are running scared right now. If shorts were trying to take this lower underneath this POC back below settlement, they're getting squeezed hard. A little pullback to like the 158s or so, 157s for scalpers. Yeah, missed it. It ends up being, what, like a, whatever kind of candle that is. Yikes. Little lower. There we go. Nice little zone for the buyers to try to pick it back up for another pop. Nice little dip back down, too. If they are going to pull back, this is more likely going to allow traders out at a break even, so I'm not really willing to do a ton of adding too aggressively. If we're looking at the impulse leg, that's still way down at 137.50, so that doesn't really prove much of anything. Give me that 146 pullback. Can we get a dip down to settlement? Ooh, they're getting close. Nice big flush down to settlement for a retest. And 37.50 is going to be the big zone. I'm just not so sure it's going to make it back there. That's the only thing. As far as actual risk for scalps, that's not even all the way back up to the highs yet. We've got plenty of room. Thick area of orange with a POC. Hang on 1 second. Well, they almost made it down to the 37.50s. Nice little pulse. Settlement's right there. Can they reach? Nope. Okay. Thick area of orange with a POC somewhere in the middle compared to a small area where volume came into a specific price. Sharp knife compared to a butter knife. Gotcha. I mean, a lot of times when you see those POCs, or like when they're stacked where you've got two of them like right next to each other, you'll see the POC kind of ping back and forth between them. I kind of look at it more like it is kind of like one big one or one thick level. primarily just because of the way that it kind of materializes, for lack of better words. 10 o'clock news. But I would treat it the same, except with a thicker one that's got like a multifaceted zone, one that's kind of bouncing POCs around in a few different places. With something like that, I would rather approach it with the more laid back approach. Like if I'm gonna trade that area, I would rather wait for a bit more context, like a higher low or something that adds a bit more information, if that makes sense. Yeah. Okay. Ooh. All right, we are going into 10 o'clock. The 10 o'clock news threw the market around a little bit, but not a ton. We've got a huge... Holy moly. All right, I'm going to jump ship there. I'll utilize that as a break-even point, and then we'll transition over into the extended session. The way that slid down, obviously, I was wrong. My job at that point became just get out of the trade with as little damage as possible. In that case, that giant jerk back to the upside, it might continue, but my initial trade plan did not succeed, so I've got to exit it. But with that out of the way, let's switch over to the extended session, and then we will roll over. Hang on. All right, so that will do it for the morning session. Hopefully, you all had a great morning session. It was a little bit more of a difficult morning session again. It just couldn't get anything going. There were a few small scalps, and I mean it's been a good morning, but the majority of the trades took place on this first one, and that's about it. This one was a little above break even. That one wasn't half bad. Then ended up getting out of break even because I only got filled on one of my two. That was a total failure and exited just above break even as well. So it's been tough trying to get something going, but when it does, it moves pretty well. We'll see what the afternoon, or well, not the afternoon, the after morning session can offer up, and then we'll go from there. So hopefully you had a great morning. If you have any questions that I missed, feel free to shoot me an email, jhb@ssftg.com. But outside of that, enjoy the rest of the day, rest up, and we will see you all tomorrow morning, all right? For the rest of you on the VIP side or the member side on YouTube, just look for the link in the communities page, and you can join that over there. So for those of you who are leaving, I'll see you tomorrow. For the rest of you, I'll see you in a couple minutes, all right? Have a good one. We'll talk to you all later. Thanks.